Hi, this is Greg McCoach, editor of the Mining Speculator. I'm here today with CEO Mike Williams of Vendetta Mining Corp. We're here at the November Metals Investor Forum, and Mike, is glad to have you here as always.
Good to see you, Greg.
Yep. Just catching up, you and I have interviewed before. I think people watching this obviously know the story, but for any new people, let's just catch them up and explain that the company has done well over the past couple years.
Yep.
2018 wasn't a good year for mining in general.
No.
So a lot of the companies are struggling with tax loss selling right now, and that's typical of what's going on. But personally, I think you and I were talking earlier in the day about the fact that it looks like the metals market's going to go our way next year, and we're anticipating that. Whether it does or not, we'll see. But what's next for you and Vendetta? That's where we want to focus today's conversation.
Well, when we originally picked up the Pegmont lead zinc project in Australia, we sort of internally thought, okay, 36 to 48 months, we need to be at the PEA stage. We're in sort of month 40 of that plan,
Right.
and the PEA is effectively done.
Right.
So we're
And that's a critical benchmark.
It's a seminal event for
Yeah.
us. That was we had two choices when we picked up the project. We're in Mount Isa district. It's a mining camp,
Right.
one of the biggest in the world, and there's infrastructure there. So we made a conscious decision. We were going to focus our drilling on development, so we could put economics around the project as soon as possible, rather than showing how big we could grow the project. We wanted to make it economic.
Right.
And we figured we need to find 15 million tons of ore, and you would demonstrate you would mine on your best 10. We're currently sitting at 14.5 million tons of ore, and I think we've got a 10-year mine life. So we've accomplished those goals.
Yeah.
But we've also done in the process, 2/3 of that are in open pit.
Right.
And that's optimized, so we've got basically a 10-year mine with the majority of it open pit now. Our capital costs are below 150 million, according to the PEA. That's significant, because what that means is a company like us theoretically could put it into production if we wanted to.
Right.
But, that's within our wheelhouse to raise that money. All the roads and infrastructure are already there to go to the smelters, and that's huge, and that's one of the reasons.
Right.
That we like the region. So now what we've got to do is how do we monetize it?
Right.
That's the key. It's
That's
easier.
the goal. You've done this before. You've monetized an asset where you made a
have.
discovery. I was up in the Yukon when you
Yeah.
made that discovery and got bought out. It was
Yeah.
very exciting. It's always exciting to talk about buyout, but with this market, are you prepared to put it in production? You're an explorationist. You usually let someone else do that, right?
Correct. Well, my model changed after Underworld, and I'll tell you why. Underworld was a grassroots discovery. It was like catching lightning in a bottle.
Right.
And I did it once, and I don't know if you get lucky and make two grassroots discoveries.
Right.
So we came into Pegmont, and I partnered with a mining engineer,
Oh, okay.
Peter Valgara.
That's right.
So you know Peter. And Peter did all the underground development,
That's right.
Oyotogo for Friedland, and is capable of putting it into
And
production.
that's part of the story here. That's why I wanted to bring it up.
Yeah. So to answer your question, yeah, we could put it into production, and if you look at the numbers on the PEA as a standalone. Now there's two mills in the region, both have one's under capacity and one's out of ore. Now on paper, both of those would make sense, but you've got to come to commercial terms on that, and I think that's our challenge going forward.
Right.
How do we monetize Pegmont, but having an underlying value of being economic as a standalone goes a long way, because it gives me flexibility as a CEO. I don't have to take any offer, right?
Right,
And
right.
if it doesn't make sense for our shareholders, then we're obviously not going to do it. But what we can do now is we're going to proceed towards production, and then that means things
Right.
like finishing off our environmental baseline studies.
Right.
We'll look at project financing next year. We're even contemplating looking at an ASX listing
Right.
if we do go into production. The comps on the Australian lead zinc stores are a lot higher than Canada.
Yeah.
Like
Well,
in some cases, 50
Right.
to 100% higher.
right, and this is what I like. I like the flexibility. You have the guy, you have the production guy.
Yeah.
You are the explorationist, but you also brought this really good
Yeah,
guy
yeah.
that knows what he's doing, the mining engineer that can make this kind of thing happen. So you have all that flexibility. If a offer comes, great. You can
Absolutely.
consider it, but
That's right.
only if it's in investors' interest. So I think it gives you a little more leverage to negotiate as well, because you're not stuck.
Well, what we're also seeing now too, now that, and the other thing too, the other thing that we need to do is secure 100%. We've got a $3 million advance royalty payment. We're looking at,
Okay.
and that's the last thing we do, then we own it 100%.
Right.
That changes the landscape as well, and we expect to have something announced maybe as soon as the new year on that.
Oh, okay.
So we have 100% in a PEA. You know, we can go talk to some of the private equity groups that are maybe interested in either partnering with us, or they're looking for base metal projects. And Pegmont is good because it can be put into production, I think, reasonably quickly,
Yeah.
based on the permitting in Australia and where we are as far as our own internal engineering. So that there's further flexibility going forward.
And
We
that's
could-
important. That's important because, you know, you want to catch the good market in zinc and, you know.
you know, we were always cognizant. I'm not, you know, I gave the talk at the PDC on zinc. That's how bad the market was when I was giving the talk in 2013. But my thesis was I expected zinc to run, and it did.
It did,
Expected to be a crunch at the smelter level, but I also expected it to pull back because it always does.
Oh, yeah.
So you know, Peter's a smart guy. We modeled at $1.05. On our PEA, $1.05 zinc and 95 lead. So we're looking at $1.20 zinc universe, and if that's a sustainable price, I think that's good.
Oh, yeah.
I don't need $1.40 zinc.
No.
Where we were wrong as a company, we were right about the geology,
Right.
we were right about the engineering, we were right about zinc going to $1.50. We were wrong about companies getting revalued when it did run. We didn't see the lead zinc companies get re-rated when we had higher zinc prices, and we thought so.
No, rightfully, I was surprised.
We
you
were,
know.
yeah, and that's where it's been a bit frustrating. And then, as you alluded to earlier, we've been in a flat market.
This has been a terrible 2018, other than the discoveries, new discoveries.
Exactly, yeah.
They were fun and we made some money there, but you know, it's everything else, it's just been a slog, right?
Oh, and you know, the institutions are still not engaged,
Right.
and I think it's coming.
Yeah.
You know, I had a generalist say to me the other day, I'm interested, you know, if you go stake beside a Bitcoin company,
Yeah.
whatever that means. You know, but I think our day is coming, and
Oh, for sure.
fundamentally, and
For sure. I mentioned to people, you know, my newsletter subscribers, I always go to the Beaver Creek Precious Metals Summit in
Right.
Colorado
Yep.
as being a really important time for me to understand what these fund guys are doing, because this is, when our market runs, it's because they're coming in big time. And,
Yeah.
and they're kicking the tires. The last couple of years, you see the interest increasing. The number of attendees is increasing at that show,
Yeah.
which tells me something's coming too. They see the change coming.
You can feel
and
it.
they can feel it, right?
I sense it in the chatter we're getting,
Yeah.
you know, just in the industry in general, the institutions we're talking to. Generalists are starting to come back, I think, and that's always a harbinger of
That's
better
it.
things to come.
That's
So
it.
looking forward to 2019.
So am I. It's going to be an interesting year.
It'll be interesting.
All right, Mike.
Hey, good seeing
Always
you,
a
Brandon.
pleasure.
Thanks, Greg.